Remember that video game Grand Theft Auto where everyone wanted that sweet, sweet Nvidia graphics card? Yeah, well, Nvidia's stock has been on a similar rampage lately. It's been climbing higher than a Wall Street banker's ego after a successful IPO, flirting with that four-digit stock price. We're talking about a cool $1,000 per share. Now you'd think a company would be popping champagne with those numbers. But no, Nvidia decides to hit the brakes and announce a stock split. It's like they're saying, hold up, everyone needs a piece of this action. But here's the kicker, splitting the stock doesn't change the company's overall value. It's like slicing a pizza into more pieces. You're not magically creating more pizza. So, what's the deal with this stock-splitting frenzy? It's a strategic move, my friends. By making their shares more affordable, Nvidia is basically rolling out the red carpet for smaller investors. It's like they're saying, come on in, the water's fine. But remember, just because everyone's jumping in the pool doesn't mean you should blindly follow. Nvidia has a history of strong performance, but it's essential to look at the bigger picture. Financial experts often advise doing your homework before diving into any investment. Research the market trends, understand the company's fundamentals, and consider your financial goals. Nvidia's innovation in graphics technology and AI has been a significant driver of its stock price. Keep an eye on their future projects and product releases, as these can impact stock performance. Remember, the stock market can be volatile, and it's crucial to be cautious. A long-term investment strategy often pays off more than trying to time the market. Nvidia's position in the market and its competitive landscape are also factors to consider. Engage with the investor community and stay informed through stock market forums and news. Educating yourself about the stock market and financial literacy can make a significant difference. Nvidia has done stock splits before, and understanding their history can provide insights. Stock splits can make shares more accessible and potentially attract more investors. Keep an eye on market trends and future predictions to make informed decisions. Watch how Nvidia's stock performs post-split and how investors react. Diversifying your portfolio can help manage risk and improve potential returns. Consider the long-term outlook of Nvidia's stock split and its impact on your investment strategy. In conclusion, Nvidia's stock split is a significant event, but it's essential to approach it with a well-informed strategy. Investing is a journey, and staying informed and cautious can lead to a rewarding experience. Welcome to Money Minds. I'm sure you've heard the news about Nvidia's stock split. Before you go all in on Nvidia just because of the split, let's take a step back and look at the bigger picture. This isn't some magic trick where your money multiplies overnight. It's more like exchanging a $100 bill for 10 tens. You've got the same amount of cash, just in a different denomination. So, why all the hype about stock splits, you ask? Well, for starters, it's often seen as a sign of a company's confidence. It's like flexing their financial muscles and saying, we're killing it, and we know it. And as we all know, confidence can be contagious in the stock market. But here's the thing, a stock split in itself doesn't guarantee future success. It's not some magical elixir that transforms a mediocre company into a market darling. It's simply a tool, and like any tool, its effectiveness depends on the hands wielding it. In Nvidia's case, the stock split is just one piece of a much larger puzzle. Nvidia has been a powerhouse in the tech industry, known for its cutting-edge graphics cards and AI technology. Their innovations have driven significant growth, but the market is always evolving. Competitors are constantly emerging, and staying ahead requires continuous innovation and strategic planning. Nvidia's leadership has shown a strong vision for the future, but it's crucial to assess how they plan to maintain their edge. Look at their product pipeline, upcoming technologies, and how they intend to capture new markets. Also, consider the broader economic environment and how it might impact Nvidia's performance. Factors like inflation, interest rates, and global supply chain issues can all play a role. It's a complex web of variables, and understanding them can help you make a more informed investment decision. Diversification is key. Don't put all your eggs in one basket, even if that basket is Nvidia. Balance your investments across different sectors and companies to mitigate risk. In conclusion, while Nvidia's stock split is an exciting development, it's just one factor to consider. Take a holistic view of the company, the industry, and the broader market before making any investment decisions. Remember, informed investing is smart investing. Alright, let's break down this whole stock split thing, shall we? Imagine you've got a giant chocolate bar and it's so thick you could barely get your mouth around it. That's like Nvidia's stock price before the split, big chunky and maybe a tad intimidating for some. Now, imagine taking that same chocolate bar and scoring it into smaller squares. You haven't changed the amount of chocolate, but now it's way easier to share, or devour yourself, no judgment here. That's essentially what a stock split does. It takes the existing shares and divides them into more, smaller pieces. In Nvidia's case, they're doing a 10-for-1 split. That means for every share you own before the split, you'll get 10 shares after. Sounds like you're getting rich quick, right? Well, hold your horses. Remember, the total value of your investment stays the same. It's like trading a $10 bill for 10 singles. You're just changing the denominations. So, if Nvidia's stock is trading at, say, $1,000 before the split, after the split, each share will be worth $100. More affordable, sure, but your overall stake in the company remains unchanged. Now, you might be wondering why companies like Nvidia even bother with stock splits. One reason is to make their shares more accessible to a broader range of investors. When the price per share is lower, more people can afford to buy in. This can increase liquidity, meaning the stock is easier to buy and sell. Higher liquidity can lead to more stable prices and potentially attract more investors. Another reason is psychological. A lower price per share can make the stock seem like a better deal. Even though the actual value hasn't changed, the perception of getting more shares can be appealing. Historically, stocks that have split often see a short-term boost in their price. But it's important to remember that this isn't guaranteed. Always do your own research and consider your investment goals. Nvidia's stock split is a significant event, but it's just one piece of the puzzle. Look at the company's overall performance, market conditions, and your own financial situation. Stay informed and make decisions that align with your long-term investment strategy. And remember, investing is a marathon, not a sprint. You might be thinking, if the value stays the same, why bother with all this splitting business? Well, my friend, it's all about perception. You see, humans are funny creatures. We like things that seem within reach. A $1,000 stock price can feel like an exclusive club, a velvet rope separating the Wall Street bigwigs from us regular folks. But a $100 stock price? Now that feels more approachable, more inviting. It's like swapping the velvet rope for an open bar. Suddenly everyone wants in on the action. And that, my friend, is precisely what companies like Nvidia are banking on. A lower stock price can attract more investors, particularly smaller retail investors who might have been hesitant to shell out $1,000 per share. This increased demand can, in theory, push the stock price up. It's like a self-fulfilling prophecy of sorts. But remember, this psychological boost is just one factor in the equation. The real driver of long-term growth will always be the company's underlying fundamentals, their earnings, their innovation, their ability to stay ahead of the curve. Let's dive a bit deeper into why perception matters so much. When a stock price is lower, it can psychologically feel like a bargain. This can lead to increased trading activity, as more people feel they can afford to buy in. More trading activity can lead to higher liquidity, making it easier to buy and sell shares without affecting the stock price too much. Higher liquidity is generally seen as a positive attribute for a stock, as it can reduce volatility and make the stock more attractive to institutional investors. Institutional investors like mutual funds and pension funds often have large amounts of capital to invest. When they see a stock with high liquidity and a lower price, they might be more inclined to invest. This can further drive up the stock price, creating a positive feedback loop. But it's not just about attracting new investors. A stock split can also be a signal to the market that the company is confident in its future growth. It's a way of saying, we believe our stock is going to continue to perform well. This can boost investor confidence and lead to even more buying activity. So, while the value of the company doesn't change with a stock split, the perception of the stock can. And in the world of investing, perception can be a powerful driver of reality. But always remember, the true value of a company lies in its fundamentals. Earnings, innovation, and the ability to stay ahead of the curve will always be the key factors in long-term growth. So, while stock splits can create excitement and attract new investors, they are just one piece of the puzzle. The real game changer is the company's ability to deliver on its promises and continue to innovate. And that's why companies like Nvidia continue to be at the forefront of the tech industry. They understand that while perception is important, it's the underlying fundamentals that truly drive long-term success. Section 3. Nvidia's Big Slice. A 10-for-1 bet on the future. Now Nvidia isn't exactly a stranger to this whole stock split game. They've done it 5 times before in the past couple of decades, and each time, their stock price was significantly lower than it is now. So, this latest move, this 10-for-1 extravaganza, is kind of a big deal. It's like they're shouting their confidence from the rooftops saying, "We're going to the moon, and we're bringing everyone with us." But before you start booking your lunar lander, let's remember that past performance isn't always indicative of future results. Just because Nvidia's stock soared after previous splits doesn't guarantee it'll happen again. The real question is, what's fueling this confidence? Is it justified, or is it just a case of irrational exuberance? To answer that, we need to delve into Nvidia's financials, their position in the market, and the overall outlook for the industry they operate in. Nvidia's recent financial reports show impressive growth, with revenue and profits hitting new highs. Their dominance in the GPU market is undeniable, capturing a significant share and outpacing competitors. Beyond gaming, Nvidia's advancements in AI and machine learning are setting new industry standards. Their strategic partnerships with major tech companies further solidify their market position. Nvidia's commitment to research and development ensures they stay ahead of the curve. Their future product roadmap looks promising, with innovations that could revolutionize multiple sectors. Analysts are optimistic, predicting continued growth and strong performance for Nvidia's stock. However, it's important to consider potential risks and challenges that could impact their trajectory. The global semiconductor shortage is a significant concern, affecting production and supply chains. Regulatory scrutiny on tech companies is another factor that could pose challenges. The competitive landscape in the tech industry is fierce, with new players constantly emerging. Nvidia's strategies to mitigate these risks will be crucial in maintaining their growth momentum. For long-term investors, Nvidia's stock split could be an attractive opportunity, but remember, a diversified investment portfolio is key to managing risk. In conclusion, Nvidia's 10-for-1 stock split is a bold move, reflecting their confidence in the future. Whether you're a seasoned investor or new to the game, it's an exciting time to watch Nvidia's journey unfold.